China right now has enough empty homes across the country to house 3 billion people. The number of excess houses in China with zero interest from home buyers has put the Chinese economy in a crunch. With defaults of major players in the game on the rise, the government is slashing prices more than it can afford to gauge the interest of people. How did China's real estate sector take such a big tumble? Will Beijing's intervention help to resolve the property crisis? Stay tuned to find out. What's happening in China? A rundown. China's property market was once the engine of its economic growth. Now, it's gone off the rails. After Evergrande's default in 2021, China recently dodged another bullet with another biggest player in the game. Country Garden's near default should not come as a surprise. China's property crisis has been brewing for years, and there is one root cause. Cheap debt has inflated a property bubble so big that it's about to pop as buyers have become limited. To solve this problem, Beijing is relaxing its policies on home ownership. It wants more people to buy all the unsold properties, which is a lot. We'll shock you with those numbers in a while. But right now, experts don't know if government policies are going to help the situation or not. China's property sector stands at the risk of bankruptcy, and ripples are expected to spread throughout the Chinese economy. It's a domino effect waiting to happen. But how did China get to this point? Let's take a look. From golden goose to a bad egg. Back in the day, the property market was the golden goose for the Chinese economy. As the Oxford Economist puts it, Chinese authorities had a trick up their sleeve. Whenever their economy needed a boost, they would turn to property investments. Take the example of 2015. When the stock market went down, the government intervened by attracting private developers to build more homes. State-backed developers did the same. Louise, the Oxford Economist, explains that China used the property market as a massive cash injection. Then, from 2015 to 2018, China undertook ambitious shantytown redevelopment projects. It dished out cash to residents whose homes were bulldozed during the urban redevelopment. It wasn't only the government that was living the high life, it was the developers too. They borrowed tons of money to fund their expansion over the past decade. Kristin Lee, who is the head of Asia-Pacific research at Knight Frank Real Estate Agency, points out that developers were not sitting on mountains of cash reserves. In fact, some of these developers were operating on a 100% borrowed basis. Their funds were flowing in from both domestic and foreign investors. Local authorities were happy to sell land to these developers, and why wouldn't they be? More land sales meant they had more money to fund infrastructure projects. Country Garden had set its sights on providing homes in smaller cities. It struck deals with authorities to secure land at discounted rates for large-scale projects. Afterwards, it passed the savings onto the buyers. But there was a problem. Lee highlights this encouraged speculative buying. It became the name of the game. Many people believed that house prices would keep skyrocketing, so buyers snapped up properties off-plan. Some did it years before the homes were even built. And if that wasn't enough, many buyers paid cash, so they could get bigger discounts than the ones going the mortgage route. In turn, this lined the developers' pockets further. It sounds like a good strategy, doesn't it? Well, it was. For a while, this strategy seemed like the gift that kept giving. China grew into one of the world's economic giants. In 2016, the real estate sector accounted for 35.8% of China's GDP. Fast forward to 2020, when the government started to get nervous about the risks these developers undertook. After all, they had next to zero cash reserves. What Beijing did next might have been the pivot of the property crisis, the breaking point. Now let's zoom in on the pivotal moment when the music stopped for China's real estate dance. Mark Williams, the chief Asia economist at Capital Economics, believes that the breaking point was the implementation of new rules to cap the amount developers could borrow. This was the red flag that set off the real estate crisis, but that wasn't the end of it. In 2021, banks went a step further than what the government had suggested. They decided to pull the plug on financing for two highly leveraged developers. Later in the same year, Evergrande, one of the big shots in the house building game, defaulted. And Evergrande wasn't the only one feeling the heat. Other developers also found themselves going bust. The dominoes started falling. Companies responsible for almost 40% of Chinese home sales have defaulted since mid-2021, as analysts estimate. Now, what happens to the people who had handed their hard-earned cash to these property developers? They found themselves in an unpleasant situation. Their dream homes failed to materialize. This also led to angry customers and riots. The aftermath of Evergrande's default was terrible. It cast a shadow across the entire market. People started feeling anxious about investing in property. Naturally, the days of explosive revenue and profit growth for developers hit a roadblock. The funding sources that had once been their lifeline had been severed. But if that wasn't enough, the jitter the default of Evergrande caused has led to another unintended consequence. People are afraid to buy houses at all, even the ones that are completely built. Excess of empty houses. The numbers we're about to tell you are nothing short of shocking. Currently, in China, China, there might be just enough vacant homes to give shelter to over 3 billion people. Did you know that's almost 10 times the population of the United States and 15 times the population of Western Europe? This is not some kind of wild exaggeration. Let's break it down. The statistics are based on expert estimates. He Keng, a former deputy head of the National Bureau of Statistics, highlighted these during an economic forum in Dongguan. He explained that experts have been crunching the numbers, and at the end of the spectrum they believed that the vacant homes in China could house around 3 billion people. And do you know what China's population is? Around 1.4 billion people. If we go by the government stats from August 2023, the total area of all unsold homes in China clocks in at around 7 billion square feet, as per Reuters. When you do the math, it translates into roughly 7.2 million vacant homes, assuming an average size of around 90 square meters, which is approximately 968 square feet. That's a lot of empty rooms. Extreme measures. To stop China from looking like a haunted house, the government is taking extreme measures. It's slashing interest rates, reducing mandatory deposits, and cutting through the bureaucratic red tape. Why are they doing this? Simple. They need to drop housing prices to a point where people see real estate as a promising investment once more. But there's a catch, or rather a few. In China, local governments are not thrilled when prices start to slide. They're worried it might dent investor confidence and stir up social unrest. The thing is that these local governments heavily rely on selling land to property developers to keep their budgets afloat. And let's not forget that they're already dealing with $12.8 trillion of debt. So there's a cap on how much property developers can slash their prices. The cap is around 15% and it is strict. In May, 2 companies near Shanghai tried to offer discounts of up to 25% and ended up being fined. But here's the thing, without lowering the price, it's tough to get people to buy. To make matters more interesting, around 85 to 90% of China's real estate market is new builds. Most of these new homes are sold using a pre-sale model, but with low confidence across the sector, it's hard to convince buyers that these properties are a safe bet. After all, who wants to invest in a property when the developer might vanish into thin air in a few months? Houses are for living in, not speculation. The Chinese government had a mantra on repeat: houses are for living in, not speculation. But in 2023, they decided to drop the slogan. They removed it from their official policy playlist at the end of July. Soon after, China's housing ministry announced plans to make buying homes cheaper and easier. They relaxed policies for people wanting to invest in a second home. Now here's where it gets more interesting. The government is leaning towards free market policies to give the real estate sector a boost. Local authorities have a bit of flexibility in setting their own rules, but lately they've been taking their cues from Beijing. In the past, non-first-time homebuyers had to give a good amount of a down payment, sometimes as high as 80%. The idea was to discourage second home ownership because officials were worried about too much speculative investment. But things have changed. Now, second-time buyers who don't already own properties can access the same down payments as the first-time buyers. However, first-time buyers have caught a break as well. The minimum down payment used to be 30% of the purchase price, but it's been reduced to 20%. Will government intervention help? So what's the verdict on these government interventions? We can't say for sure. Experts believe that lowering down payment ratios hasn't done the trick in smaller cities. People are still nervous about the economy and how it'll affect their future income growth. William has also mentioned that the demand for properties is expected to keep on the decline as the population ages. He also stated that many developers are still at a lot of risk, and it will only take something small to trigger more high-profile bankruptcies. If that happens, it would suck out any remaining confidence among homebuyers. Christine Lee added that property market recovery looks like a far dream. Not only that, she has warned about a contagion effect as well that could hit China within the next 12 months or so. The government can lower the restrictions even more on home buying, but that's also dangerous to do so. Lee warned that the government wouldn't want to kickstart a boom and bust cycle. The next steps are still under deliberation. No one's sure how this real estate rollercoaster in China will play out. However, there's a chance that this crisis can spill over into other sectors of China, causing a global economic crisis. Do you think China can convince homebuyers to invest in property again? Or is China's property crisis a dead end? Don't forget to let us know in the comments below, and to know more, check out our latest video.